what is my Rocket Lab price target? First, if you followed me, you know that I do not have a price target. I have 3 price targets. So these are calculated, determined on the base of my 4 dimensions framework. First dimension is my thesis, my narrative. So my thesis, and if you followed my article, you know it. If not, go and read my articles. Is that Rocket Lab is basically gaining market share in the small size and very soon medium size rocket launch market, and even is growing on the space system market, gaining market share. So this is thanks mainly to vertical integration. They are doing a lot of acquisition to become more and more vertical integrated, and to the outstanding management under the lead of Sir Peter Buck. This is, in few words, my thesis. And of course, after this, there is space from services that actually what the market, as we will see, has started discounting in the price, in my humble opinion. So first, so normal case scenario, how I go to fill this assumption is thinking that the normal case scenario has 50% of chances of happening, right? Then I do the same exercise with the best case scenario, 25%, and then with the worst case scenario, 25% again. So when I'm filling my assumption in this cell, I'm thinking, what assumptions have the 25% or 50% of probability of really happening, right? So it's, of course, discretional as any evaluation you can do. But this is based on my thesis and my narrative, it's not based on analyst number, otherwise it's completely useless. So very quickly, what are the assumptions here? You see, I have divided this model in 3 products, product 1, product 2, and product 3. Of course, space systems, electron, and neutron. So this model actually does not include space services, because I wouldn't know even what to include. The management has not shared anything so far about it. So we have space systems that is growing year 1 to 5 and 6 to 10, 30%. And then years 11 to 20, 25%. So it's slowing, but still remaining above what is the total addressable market growth, that is 15%, right? So this is my assumption on space systems for the most likely scenario, that is the normal case. Then I have electron, 30, 30, 25%. So the same. And neutron, 40, 40, 30%. Of course, neutron, the 40% starts, I believe, yes, on year 3, because year 1 and year 2 are calculated based on what the management has shared as a goal. That is basically here couple of rockets in year 2027. So by the end of this year, they will launch the first, if they are on time, and then they will go to year 2 to 2027, and then they will go to 5. And the price is 50 million, the first 2, and then 60 million, the next 5. And then from here, it goes to 8, year 3 actually, and from year 4, it takes from the formula, so it grows 40% for the rest of the 10 years, and then 30%, okay? So still above the total addressable market, but of course in the Newton case is even less important, because the market, market share is 0 at the beginning. So these growth rate are a bit below what Rocket Lab is growing now. And that's, of course, at least average, right? And that, of course, it makes sense, because it's realistic to think that they will slow a bit down compared to what they do now, average over 10 years. So this is the normal case. Of course, until up to here you have the gross growth for each product, and then here you have the common part to get to the EBIT, operating margin, and then to the free cash flow. Now, without going through these assumptions, because otherwise it's too long. But you can access these sheets, guys. So go join the Business Ontology. You will find the link in the first comment or in the description of the video, and there you have pinned in the group, Telegram group, all the link to access my content, included these sheets. Okay, so you can verify yourself. So long, short, in the best case, the assumptions are a bit more aggressive, closer to what is the growth now. So 35, 35, 25 for space systems, and then 50, 40, 30 for electron, and similar for neutron, 50, 45, 30. These assumptions look aggressive, but I think these are realistic. It could happen. It's happening now, so it could happen, of course. I mean, the total addressable market is infinite. If you look at the current market share, and it's growing, I believe, even faster than what analysts expect. And then you have the worst case scenario, so a bit slower growth. But what it really changed is that neutron, it's delayed around about 1 year, right? So you see in 2027, revenue is still 0. And then they start basically in 2028, launching the first, and then go to 3. Sorry, this is, it's actually, it's a bit steeper in this case. You go to 5, 6, and so on. Okay, these are the assumptions. What's the result? First, a note here. If you see, and I a bit revised this model, I made it more accurate compared to the one that you have seen for, I believe, last one was HIMSS update. I have put some sanity checks cell here just to see if the assumptions are realistic. I would like to focus on this. This is indicating basically the percentage of the valuation that depend on the terminal value. So this is a discounted cash flow, meaning that you are doing the sum of all the cash flow, free cash flow produced over 10 years, and then you're of course actualizing them to today, discounting, and then you are adding, still discounted, what is the terminal value, that is the free cash flow at the year 10 multiplied by a multiple that is a P to free cash flow ratio, basically, right? That is calculated on the base of the growth that are coming after year 10. That's why you have even the growth, you are estimating the growth for year 11 to 20, and then you have somewhere below, you have even the perpetual growth after that. So that are needed to calculate the terminal multiple. So this is to say that 99% of the value for the best case, for the normal case is a bit lower, probably 98, but still 99, basically, if you round up, of the value is given by the terminal value. So basically, in other words, everything is here till year 9, it's irrelevant. This is very risky. I mean, the valuation cannot be accurate until a certain point, certain level. But this is normal for a company, and in general for any hyper growth company. This is perfectly normal. The valuation will be given from 70 to 100% by the terminal value that you consider. So basically, all these assumptions to say, guys, that you need to take this smartly, because these are highly dependent on your, I mean, the target price are highly dependent on your assumption, and still are not accurate at all. So this is even the reason why I do not calculate a target price, but I calculate 3 price target, because I want to have a range and then move within that range to change the allocation. I do not use price target to say I invest in this stock or I do not invest, unless the result is extreme, right? So it's important to understand what is the limit of this exercise. So basically here, another thing I want to point out before to go to see the result. Beta is basically 1.6. This is important because it determines basically what is the required return on the investment. That is what you use to discount the terminal value and all the cash flow. So if you change here from 1.6 to 1.3, it change everything, the results. So again, this makes you understand what is the level of reliability of this exercise that I'm doing. It's very, very low. So you should just take it as an indication. This value is basically how risky is the company. And the more risky is it's not how risky is the company, it's how risky is perceived the company by the market. So the higher this value, basically the higher is the required return on investment, and so the percentage you discount the cash flows. Meaning that if the market S&P 500 is returning 10% per year historically, if this beta value is 1.6, it means roughly that the market is requiring 60% more ROI from this investment rather than to invest in the S&P 500. What's the rationale here? Well, if I can make 10% by investing in an ETF on S&P 500, if I invest in Rocket Lab, that is much more risky, then I want a 13% in this case, right? So it's very important what you put here and to be realistic. And by the way, if you look at the beta now, beta is a calculated value. It indicates what the volatility of the stocks compared to the market. So if it is 1, it means that it's moving with the S&P 500, with the market. If it is higher, it means that it's moving more. And if it is lower, it's moving less. So higher it is, higher the volatility, higher is perceived, higher is the return on investment that the market requires. So again, this is just to explain that, again, this exercise is very volatile. Now, to the result. Best case scenario is 1.6. So in the best case, you make 60% out of this investment. Normal case, it's you lose 20%. Worst case, you lose 80%. So it appears clear that another important assumption, the dilution, 4% dilution. Now, last year was even higher, but I think it will stabilize around 4%. So this investment, looking at this, is not asymmetric any longer, or at least it is asymmetric, but to the downside, not to the upside. Now, what's here an important thing to recognize is that in this model, I have not considered space services, right? So this is only pricing space system, electron, and neutron. Now, I think the market may be starting to price space services. It's risky because I believe space services will not be a thing, will not be generating meaningful revenue before 2, 3, 5 years, probably, being optimistic, because you need neutron to be established before being able to launch constellation. So let's say maybe you will be able in 2 years from now, and then you start building a constellation, and then maybe after 1 or 2 years, you start generating revenue. Roughly, this could be a timeline. So anyway, even if you build in this model space services, trying to be aggressive, let's say you make some assumption that they are generating revenue in 5 years, still the value, they will be worth nothing after 10 years. So it doesn't move the needle. Of course, in 2, 3 years, probably the valuation, if you start to pricing in space services, may even double from here. So guys, again, this is just for educational purpose, no financial advice. Ciao.